Hi, I'm Don Singletary, and welcome to the channel. Today's trade of the week is going to be a Russell 2000, and I have some great tips on MACD and candlesticks right after today's video. Featured trade setup's really easy this time. Market opens at 9:30 and goes straight up until about 10:15, which is about where I'm going to place today's trade. You'll see the green over the red, both above the zero line. That indicates a good chance of positive momentum coming up. And of course, I'm entering the bracket. One cancels the other, OCO. A feature in Tastyworks and other software too. Tastyworks OCO bracket order has that built-in calculator up there, which is of course nice. 1 minute into the trade, it went long, one contract, $5 a point at 10:14. As you can see, my stop is just about 3 points. I'm going to round off here. So my maximum risk on the trade in the beginning is about $15. Not so bad. And I'm getting in on part of a trend. I'm going to ride this price wave up on my trading surfboard, so to speak. I like that analogy because you can get part of a trend. You rarely will get all of it. That would be perfection, which in trading with as many unknowns as this type of trading is virtually impossible. Perfection, I mean. See, I have my target up there, 2025. There's no secret math about that. It's more or less just a placeholder. I could have put it anywhere up there. It's the market doesn't care what I want, to put it bluntly. What we're trying to do in this type of trading is carve out a part of a trend, in this case an uptrend. Now, you can't do perfection where you get it the moment it turns up and exit the trade the moment it turns down. That rarely, if ever happens, believe me. I neatened up there a little bit where you're at $15. The stop is at 2010.1, exactly $15. Maximum risk on this trade. If you want to know how you're doing on trade selection, and in this type of trading, trade selection is everything. And we've had a drawdown here in the first couple of minutes of this trade, somewhere between $5 and $7, I think. I'd have to look back to be sure, but not very much. Now, why am I talking about that? Because the more trades you have small drawdowns on, that means you're doing a better job in your trade selection. And as I said before, trade selection is everything in this type of trading. If the market goes down for me instead of up, I don't mind losing the $15. Well, that's not true. Of course I do. But what I mean is I'm not going to lose any more than that. And for me in this particular trade, due to the experience of being able to try to gauge what I'm doing with these things, and you do have to practice a lot and get that experience, it increases your confidence. But in this particular trade, I just feel that $15, if the market doesn't go up without going down $15 first, I think I'll have a pretty good trade. If it goes down 15 and I lose it, well, if you want to ride the bus, you got to buy a ticket. In this case, the ticket costs $15. Now, just to be clear, I'm talking about where I had my stop order was 3 points back initially. You can see right now it's only 9/10 of a point back. So the current maximum worst case scenario on this trade is that I lose $4.50, 9/10 of a $5 point. We've been into the trade now for 5 minutes, and we're up $7.50, 1.5. And the secret, although it's no secret, to having a calm trade like this, where you feel like you're halfway in control, is it's good trade selection. It all goes back to that. That time you sit and wait and do nothing will pay off for you just as much as the time that you're actually in a trade, maybe more, because a lot of the trades you don't make will allow you to keep your money. And if you have any experience at all in trading yet, you know exactly what that means. And beginners, you have that to look forward to learning. Also, I'd remind beginners there are 2 4-video playlists, the links to those called Beginners Playlist. Look for that text underneath the video. There's a link there for you. Okay, I'm taking my Tastyworks mouse now. I'm going to turn this thing into a free trade. Watch this. I click and drag, that's the left mouse button, and I hold it down to move it and let it go, and then it changes the order there. So I just moved my stop up over the price where I bought. this contract. So that means I cannot lose any money. The worst thing can happen now is I make 0.7 of a point. It's about $3.50, plenty more than to cover all the commissions and everything. So it's impossible for me to lose any money, even a penny on this trade right now. I was talking a moment ago about how this type of trading is risky. You'll lose about 40%, make 55 to 60% if you're good. And the trade-off on that is that you can make a lot of money comparatively pretty quickly with this kind of trading. Let me show you why. The margin money, that's the good faith money I have to have in my account in order to place this trade today, $206.50. Now, the notional value of the Russell 2000 contract at $5 a point times 2013.1 is $10,065.50 is the notional value. So you see there in the white on the screen, we're trading at a leverage of 48.7 to 1. Now, if you bought $10,000 worth of stock, the least you have to put up is $5,000. So you see the difference. For $206 in futures, you can trade the same amount of value that you can, that it would take at least $5,000 in stocks to do. That's why people love futures. Now, before May of 2019, this is a 1/10 size contract we're trading today. So the regular Russell 2000 would cost $2,065 to trade. But now, since May of 2019, 1/10 size. That's why they're called the Micro Eminis. This is a very big deal because now millions of people can trade these futures that couldn't before May of 2019. So congratulations for those willing to put in the time and do a little learning. These new Micro E-minis are amazing. Over 1.5 billion have been traded just since May of 2019. People love them. Now, you have to have some money available you can allocate to a higher risk type of trading. That's what this is. It's higher risk. You have to be willing to take that risk. Not everybody is, and it isn't appropriate for everybody either. But I got to tell you, if this is your cup of tea, it's a lot of fun. It's like having a casino right at home. There, I said it out loud, didn't I? While I've been explaining the leverage to you, I've moved my stop up a couple of times. It's now at 2016.50. This has been a really easy trade to manage. I'm in the trade 10 minutes up $17 now. Here on my channel, about all you see are smaller trades. We're making anywhere from $10 to $100 in most of our trades. None of this $800 before breakfast stuff, or how I tripled my account, or how I turned $1,000 into $10,000 in a month. All those guys want you to send them thousands of dollars for training in their secret. But I'm showing you everything right here. I'm trying to be honest about it, because what happened when you learn to trade small, heck, you know how to multiply. Instead of $17, you can make 34. Then you can make 68, and so on. You can trade as many of these contracts at a time as you want. And remember, they're 1/10 size. In this trade right now, if we were trading the regular Russell 2000 contract, we would be up $170. The slogan here on the channel is we teach affordable day trading. And you get to do something those other guys don't get to do. You get to use smaller amounts of money while you're learning, so you're not risking as much. And if you fail, you won't lose nearly as much either. I have over 125 free videos here on the channel, absolutely free. And the only thing I sell is a book called Day Trading the Micros, which cost about the size of a large pizza. There we go. We're stopped out of the trade now, and that's a successful trade. It was a pretty easy one, actually. Whoops, did you hear what I just said, that my book cost about the size of a large pizza? Pardon me, a little attack of synesthesia there. I meant to say, as you probably remember, that the book cost about the same, about as much as a large pizza. There's a great chapter in there on trading psychology and lots of trading tips for you. I got an email the other day from a guy who says he's operating in his practice account. He hasn't gone to real money yet. And he said that he's been doing pretty well with it, but he's had a lot of losing trades too. And so I asked him a couple of questions to try to find out what it was he was doing and see if I could offer a suggestion. And what I found out was, now he wants to trade Micro E-minis, say at $5 a point. He's trading in his practice account with the E-minis, the regular E-minis. So it's $50 a point. Now, if you practice trade and you go down 3 points on an E-mini, that's $150, and you're going to have a huge emotional and psychological reaction. Whereas with a micro E-mini, it being $15 down for 3 points, you can probably handle that a lot calmer and a lot more easily. So practice what you're going to be trading. Don't practice something that you're not even going to do. It just does no good at all. I forget sometimes. Beginners don't know these things. So I wanted to be sure that I brought that up today. I promised you today when I started the video off, I talked some about the MACD and also a little bit about candlesticks and try to get some trading hints and tips for you that you can use. Now I want to show you something really quick. Here I have my browser open, and I'm going to Google image search candlestick patterns. And you can see when I put that in there, just look at this. This is just the beginning. There's scores of pages of all these different patterns. And all of them, each one somebody wants to sell you. And each one of them, they say, works wonderfully. All you have to do is use their system. There's over 200 or 300 different named patterns. Let me show you some of them right now. Do yourself a Google image search for candlestick patterns, and you'll see there's 15, 20, 25, or 30 pages of differently named candlesticks. It's crazy. Here's just a few. Hammer, inverted hammer, dark cloud cover, 3 black crows, bearish engulfing, evening star, piercing line, 3 white shoulders, and I could go on and on and on. There's literally hundreds of them. Now listen, you can trade with candlesticks this way, or you can go back and see the original video that I made about the fellow who invented the things hundreds of years ago, and you get a nice, simple, effective explanation. This is the samurai that created candlesticks. He used them very successfully, and not one of these 150 or 200 patterns on the internet right now ever rolled off his tongue. He was dead years before any of this stuff came along. You can learn everything you need to know about candlesticks and forget these hundreds of named patterns. You can do it in under 10 minutes. I made a short video on it. It's homage to the Japanese samurai, a brilliant, brilliant businessman who sold cotton, and he invented the candlesticks, and you'll hear the story and see exactly how they were intended to work. I promise you the time you spend, that 10 minutes, watching the candlestick video will be well worth it. I want to talk about the MACD for a moment now. The MACD is a trade signal indicator, and I use the default settings at 12.26.9 in an exponential format. You don't need to know what any of that means. You don't have to know how to build a car to drive one. The MACD is what it is. It's a trade signal indicator, and it's not that drastically different from a dozen others. It's the one I like because when I use it with candlesticks, because I like candlesticks because they relay more information to your eyes faster and more accurately than some of the other ways, like a bar chart, for example. If you prefer to use something else, that's your call. It's your money, right? But I want to talk about the MACD just a moment. I use those default settings at 12.26.9 in an exponential format. That is kind of Greek, and you don't really need to know that, but you do need to know how to use it. It has 2 time segments, one longer than the other, and it's a mathematical formulation to try to show you some indication in terms of momentum. Momentum is the operative word there. The MACD does a good job of reading momentum. You can see on this chart here, it opens at 9:30 in the morning. The market does, and prices go right up, and the green line is over the red line, and they're both well above the zero line. But what's important as the market continues to go up until about 10:45 in the morning, you'll see that the green line and red line, the space between them stays about the same. And what that means is it's an indicator that the momentum is continually climbing. Now, you can look over on the right scale in that lower pane. I'll highlight that in yellow for you. And you'll see that the red and green lines from 9:30 up until about 11 o'clock. they go from 0 up to plus 7.4. That's a measure of the momentum. Think of it kind of like the speedometer on a car. You know, the market's going up. It's going as fast as 7.4 now. And look what happens at about 11:15. It stops accelerating, but it still maintains the gains that it's had already. Now, why is that important? They have that saying, the trend is your friend. And on this particular day, when a market is going up from 9:30 until 11 o'clock, basically, and the momentum is continually climbing, you certainly don't want to short trade anything during that time. And you see that even when the market levels out, like from 10:45 to 11:30, even when it evens out, it still stays up in price. Even though the momentum isn't climbing, it still has momentum. I know that because of that scale and the 7.4 over there. So that's an indication. What you've got the market telling you here is don't short anything on this chart. It's that simple. It really is. I do hope you're starting to understand the concept that trading happens between your ears. The bad news is there's no secret formula to profits, but the good news is you've got these tremendously wonderful tools, the candlesticks and the MACD, and you can learn to use those tools like any craftsman to get better at your trade, and that's how progress happens when you're trading. Covered a lot of good things today, and I hope you were able to take away a few things that'll help you keep some money in your account. If you please, I need your help. If you want to see another video that's similar to the one you saw today, hit the like button. It helps me keep tabs on things so I can bring you the videos that you need to see. That helps me out a lot. Be sure and hit the subscribe button, and if you hit that little bell up there, they'll send you a text or an email, and you'll be notified each week when I bring the new featured trades of the week up to the channel. It's been great being with you today. Be sure and take a look at the book link below. We have, I think, over 300 five-star reviews now, and it has a great chapter in there on trading psychology, which I think is so very, very important. I had a great time today. I'll see you next week. I'm Don Singletary. I hope every day is a payday for you. Thank you.